Hey everyone, in this video we'll be talking about the Sydney property market, a deep dive whether the bubble will now burst, what is going to happen over the next year, over the next 6 months in Sydney house prices. If you have property in Sydney, or if you want to invest in property in Sydney, or you're renting in Sydney and you're wondering, should I hold off before buying in Sydney, or should I completely defer the decision to buy my principal place of residence, continue to rent and buy outside of Sydney another place to be able to build my wealth up, rent vesting? If you're in one of those camps, then this video will be super useful. Alright guys, my name's PK and I help build people passive income through property investing using data without needing $15,000 buyer's agents every single time. And if you get value out of this channel, which really exists to help you get ahead through real estate, then pop a subscribe, pop a like, hit the notification bell, just give me some love, and that way YouTube helps me as well. Thank you so much, guys. So let's get into it. So this is a report done by UBS Investment Bank. UBS, incredibly well known, good reputation in their research abilities. We'll be going through about 5 graphs or 5 charts, 4 to 5 illustrations of whether Sydney is in a bubble, whether Sydney is now really extending itself in terms of affordability. You might say, well, that's kind of obvious, but bear with me. We'll try to prove it using some science, using some data. And, this video will really, this report will really kind of give you an idea of how Sydney stacks up against other areas. So this is the first one that you can obviously already see. So basically what it's saying is that if these cities are yellow or amber, then they're overvalued. The housing market is overvalued. If they're green, it's fair valued. If it's gray, like Dubai, it's undervalued in terms of the property market. And red means, bubble just about to burst. So far we can already see that Sydney is 1.39, right? Which means that it's within this category of 0.5 to 1.5, right at the top end of being overvalued, just about to go into bubble risk territory. But you might be thinking, well, what does this mean? Like, what's the methodology? So for those of you who are interested, let's just deep dive into this score for a moment. So the index score is a weighted average of the following 5 standardized city sub-indexes. So 1, price to income and price to rent. All right, so that's a ratio of affordability. Second one is change in mortgage to GDP ratio. So that looks at the affordability versus the production or the average incomes or the GDP for the country. Another one is change in construction to GDP ratio. And the next one is the relative price city to country indicator. So relatively speaking, how expensive is this city's property to the rest of its country or to the rest of the nation in which it belongs. So it's a weighted average. So it's not just like a blunt instrument. It's a pretty sophisticated way of saying, are we in bubble territory or are we not in bubble territory? And you can see how Sydney stacks up, right? It's here number 11. The arrow indicates that it's increased in its, going towards bubble territory, red territory, unaffordability territory since 2020, since the last year. So this is a year-on-year comparison. You can see that only Sydney and Tokyo, they're the ones that are the highest in the unaffordable, or you could say overvalued category. They're the highest before you start to see the likes of Amsterdam, Paris, Stockholm, etc., which is just completely, according to this UBS report, completely in bubble risk territory. You wouldn't really want to be investing in property in Vancouver, Munich, or Hong Kong, or Toronto, or Frankfurt, or anything like that. So it gives us some context. It's not completely out of control, but it's so close to being in a bubble risk category that it's not even funny. All right, so the next thing I want to talk you through is this thing right here. So this gives us an indication, this chart, of that same categorization. So bubble risk is up here, overvalued is here, fair value is here, undervalue and depressed in the APAC geography. So in the Asia Pacific geography, you can see Hong Kong, Singapore, Sydney, and Tokyo. Sydney is this light gray one. So if I put my mouse here, it tracked like this. And after the 2017 boom, it came down and now it's going right back up. Now, the key takeaway that I want you to take away from this chart is that as soon as Sydney has reached this line of 1.5, which is right at the end or right at the top of, being overvalued, it always comes back down. So you can see back here in 1997, it hit 1.5, came back down, which means prices stopped growing. In other words, prices came down. Okay, in 2005, it hit 1.5, it came down. 2017, it basically hit 1.5, it came down. Now, again, it's hit 1.5. And so it would be a brave man to say that it would now, break through that resistance barrier and go up to 2 or 2.5, right? So you would probably bet your money that it will come back down as well. In fact, no geographies or nations within Asia Pac, save and except Tokyo, very briefly up here, have actually exceeded 1.5 consistently or sustainably, right? And you could see what happened to Tokyo up here when it went up into bubble territory, it came crashing down. That's a huge crash, right? Sydney's never really seen that kind of crash. As you can see, when it goes up, it comes down, but it's still not as, far below as being in negative territory, this gray line. And also you can see that Hong Kong right now, despite the political turmoil that, it had seen over the last 2 or 3 years, it's going into bubble territory now as well. So guys, if you're getting value, there's one more chart for me to explain. If you're getting value, if you're getting some benefit out of this, it's broadening your horizons, it's deepening your knowledge, hit the subscribe button right now and give it a like, give this video a like, and that way more people will see it, hopefully, that are in Sydney. And then the last thing I wanted to share with you here is the annual house price growth rate for Sydney. So once again, it's sometimes hard to see the forest from the trees. Right now, price is going astronomically high. It's out of control. It's madness. And you can see here, price growth has been rampant. 2020, almost 10%. 2021 in Sydney, well over 10%. You can kind of see the forest from the trees, how actually in the early part of this millennium, it had been even higher, right? 1 year in 2022 or 2002 had been 20%. That's huge, which is probably what 2021 is going to end up at, right? So this allows you to understand in context how to perceive this boom, and actually the last boom that Sydney experienced in 14-15 was actually much more mad or much more rampant. You might say, well, prices were lower back then, but that's what people were saying back here for this boom, right? So it's always kind of, famous last words. But the next thing I wanted to show you here, which is really quite disturbing, is this price to income ratio for Sydney, this dark gray line, which is this one up here. It's higher now basically than it has ever been before. So price to income ratio, which just means the price of houses relative to incomes, it's the highest now that it has ever been. So even though interest rates are lower, right? So your ability to repay a mortgage is better than what it was in 2017 when this ratio was higher. Even though interest rates are lower, we're straight back up to this resistance level. So as soon as interest rates start going up again, what you'll find is actually this point is much higher than this point, right? Because interest rates are going to be going up. All right, so what that means is that it's very unlikely that this price to income ratio can continue going up, right? It's incredibly unlikely. This is at record levels, and as soon as interest rates go up by 1%, 2%, which will probably happen in the next few years, that's really when Sydney will start to feel the burn. All right, guys, so the takeaway from this video is that if you're in Sydney, my recommendation is it's probably not the right time to invest in property. Of course, if you have a long-term buy and hold, you just want to hold the thing for 20 years, then, it's going to go up over the long term anyway. But if you want to build a portfolio, if you want to build passive income, it's not the right time to invest in Sydney. Use that capital, invest it in other places like Brisbane, like Perth, like Adelaide. And if you want me to do deep dive videos on those cities, leave a yes below. And also, if you're thinking, I'm stuck, I can't buy in Sydney, I'm renting at the moment, I'll never be able to afford, then Don't just go off and buy a silly apartment in Sydney. That's something you'll regret. Rent vest, all right? Continue to rent. Rent money is not always dead money. Use your savings, use your borrowing capacity, buy investment properties in other places around Australia, grow your wealth, and then in the future, because these price rises aren't going to happen forever in Sydney at this rate, it's just not sustainable. In the future, 5-10 years from now, then you can sell maybe one or two of those properties in Brisbane or Adelaide or regional and buy your dream home in Sydney. That's the way it works. There's not one property market, there's markets within markets. Right now, Sydney's not really, in my mind, the time to be investing if you want, huge growth in the next 5 years. As well as that, it's hugely negatively geared. All right, huge risk there. My advice, don't put all your eggs in Sydney, diversify. And if you got value out of this video, guys, hit the subscribe button, turn notification bell on, and give it a like. I hope this kind of educated you. This is from UBS. You can find this out yourself. You can Google the report. And lastly, I just want to say, if you really want to step up your learnings using data just like this, but by suburb level, check out the links below to my podcast, the Facebook community, more than 10,000 people in there, and my website. See you later, guys. My name's PK. Ciao.